Hi, this is Todd Baker, your certified mortgage planner, and in today's version of Todd Talks, we're going to discuss a unique opportunity to buy. Right now, if you know how to discuss what I'm going to show you with a buyer, you can help people achieve home ownership in a limited window of opportunity that's going to be gone by probably March. So let's go over what I mean by all this. So first, let's look at what's going on in the news today. So if you look at what's going on in the news today, flashing red signs mean U.S. housing bubble will soon burst. Housing market recession, home builders warn of unsustainable. When do you expect the housing market downturn to conclude? Economists predict ugly fourth quarter for housing market. So that's what's being consumed by all of us, but that's what the buyers are hearing, right? So buyers and sellers, that's what they're hearing. It's going to be ugly. All right, so let's go to the next slide. Let me show you what. So right now, selling interest is waning. Okay, so if you look, interest has plunged. This is a graph where it's going down, and mortgage applications have just dropped off a cliff, right? So mortgage applications have gone way down. And so that's sort of where we're at. So we're in a period of hope and fear. And what I'm hoping to impart to you guys today is hope, because there's some great hope. So first off, let's dispel the myths of the housing bubble. Okay, so let's look at right here. Housing bubble fears, nothing new, right? Look at 2015 through 2021. Look at these headlines. A bubble, a bubble, a bubble. Meaning housing boom is over as new home sales fall to pandemic low. This is July 2021. Actual, 18% gain. 2019. Next year will be hard on the housing market, especially in the big cities. Actual result, 16% gain. 2019. The housing market is about to shift in a bad way for buyers. Actual result, 4% appreciation. 2018. It's better to rent than to buy. Actual result, 4.1%. Look at this one from 2017. Home ownership doesn't build wealth, a study finds. Actual appreciation, 6.1%. So what we know is the news and the headlines sell fear, but it's not reality. But what it has done is it's created this unique moment in time, is what I'm calling it, right? So in March of 2020, President Trump declares COVID a national emergency. There's 20 COVID-related acts passed. It significantly increased the money supply. This is a chart of the money supply. This is one of the reasons why there was inflation. That, and there's a bunch of all the stuff that's happened in the last 18 months even made it way worse. It wasn't the early stuff. It was the recent stuff that really put fire on inflation. So that's not helped rates. But that happened, right? In July of 2020, North Texas home sales reached the highest level in history, further reducing activity. In 2021, we had the freeze. Remember the freeze? We had that week freeze, rolling blackouts, all that. Well, believe it or not, that caused further supply issues while removing approximately 5,000 listings. And right here, you can see what we just said, my last two comments. This is a trend of listings. See, it goes down and it goes up for the buy. It goes down, and then buying season, slower winter months, buying season. But see, the trend lines up, and then we see 2020. We don't even reach the. So we already have an inventory shortage. We get whacked in the February freeze, and what the freeze does, people couldn't list right away because they had to repair their homes. And the bottom line is we have an inventory shortage that we haven't recovered from. Then to make matters worse, mortgage rates fall to their lowest level, fuels this massive demand. Supply chains get disrupted. Commodity prices like lumber go parabolic, right? And then in 2022, mortgage rates begin to rise at the fastest pace in history. Buyer demand cools, leaving builders with excess inventory. So they create massive incentives. And we know we work with builders. So they created these massive incentives to sell homes, and they significantly reduce starting new home builds. And so we will enter 2023 with an inventory shortage of only 2.3 months. And if you look, and this is just the closed sales. So normally you can see this is trending down. This bottom line would be the bottom line would be the trend down during the low period of the market. We're sort of entering that now, but that's going to spike back up as soon as we get into the spring. One other chart, you can see that inventory appears to have peaked. So we know sort of based on price reductions and where inventory is at that it looks like it has peaked. So we're pretty confident inventories peak and that the buyer demand is cooled, but will pick up. And the reason we know buyer demand is going to pick up because interest has been rising. This is a long-term trend and you can see the trend line of Google searches Google search buy home. Look at the trend line. So the interest is really there. So the question becomes, what's the economy going to look like? So the economic forecast, this is a 5-year economic forecast. So at the end of 2022, we had negative growth. Now the third quarter just came out and it was positive due to exports, but we're going to have a real slow or sluggish economy. 2023, you can see right here, virtually no growth, and then it starts to pick back up. You can see inflation wanes off, and you can see, these higher rates are correlated also to what? Inflation, higher Fed funds rate, higher 10-year treasury, higher 30-year mortgage. And you can see those trending down. So this is what I'm saying. This cooled demand, what cooled demand is going away very quickly. So last thing is, one of the reasons why mortgages, just to give you some confidence, mortgage rates normally trade 175 to 200 basis points above the 10-year treasury, whatever the 10-year treasury is trading at. And you can see that right here, that's the trend line. Look at where it's at right now, it's way larger. Right now, they're currently trading at a 30 basis point spread. And basically what that means is the people that buy mortgages, that create the demand side for mortgage-backed securities as a long-term investment, right? They want to receive that payment stream as income. Those include pension funds, insurance companies, domestic ETF funds and mutual funds, international traders. There's a whole group of the investment community that buys these. They're telling us that we want a premium on interest rate because we're certain rates are going to go down and everyone's going to refinance. So we're going to make sure we have a high enough interest rate right now to make a profit. So that means even the investment community thinks rates are going to go down. So check this out. Last July, it's June and July, rates actually dipped because the market just decided that the Fed was going to pivot and quit raising rates, and the inflation was going to come down low, and mortgage rates would follow because of that. And then it did happen. But the thought of that, everyone gambled on that, it forced rates down, and we saw an immediate uptick of buyers. And as soon as they went back up, the buyers went away. So there's an affordability gap for buyers, and I'm going to show you right now how to solve that. So when you look at, let me pause this, get the next slide up. So when you look at where we're at right now, we can still get some seller concessions. So on this example, we're going to say we get a seller concession of $12,500, right? So that's a little bit over 2% on a $400,000 house, right? And we're almost 3%, excuse me. So 3% on a $400,000 house. So it sort of depends on the price point. But in this example, $12,500. And then what we do is we have a reduced payment program. So we'll take the seller concession and we fund it into a subsidized escrow account that helps make the payment each month, thereby reducing the payment. So check this out. Right now, if you have a buyer looking at a sales price of $489, a loan amount of $389, like I said, once again, this is just an example. I would customize this to your buyer and for your sellers too, when they need to sell, knowing that hey, here's how you can sell and still buy. They would be paying this $3,500 a month. But under this reduced payment program, the first year it's only $2,784, the second's $3,000, the third $3,267. Most of the ones I'm doing are just a two-year subsidy. And the reason why is because rates are going to come down and we'll refinance them. When you refinance, they're going to end up with this way lower payment, right? So what this does is this subsidy amount, so the amount that's used as a subsidy, so we get the seller concession, we use it as a subsidy, it's put into an escrow account. the buyer gets a way lower payment for the first year, a slightly higher payment for the second, and in some cases we can do a 3-year if we can get enough concession from the seller, but certainly 2 is for sure. And that's in that window we can refinance them. And I do a presentation to your buyer showing buy now, refi 6 months to 24 months. Any money in that subsidy that's not used during the time they have the original purchase loan, when they refi, let's say they refi and they still have $5,000 left in that escrow account for the subsidy, it just goes to pay their principal down, which means that money lowers their current payment. It's like you got them a price reduction if it's not used, or a payment subsidy to buy now. So they can buy now, avoid what's going to be a huge battle for homes that's upcoming due to an inventory shortage, and you've provided a massive hope. I can help show this to your buyers. Get them in touch with me so I can do a proper presentation, and then connect with me so we can deepen our relationship and strategize on how we get out and promote this to your clients and your database. I would be on the phone if I was you with your family, your friends, your sphere, your database, everyone you know. Do that, and you're going to see a nice end of your year and build up a nice pipeline for your first quarter of your business, helping people achieve the American dream. Thanks so much and have a great day.